Lululemon after the bell. Let's do some trading. Scott Bauer is the CEO of Prosper Trading Academy. And right now we're looking at, I think, an interesting move ahead of the earnings. Scott, we've been looking at some of the China-centric names like Nike. Mike mentions the importance of international growth for Lulu as well. And I mean, Nike passed basically with flying colors according to the market reaction to their earnings. So how do you want to approach this with Lulu? At 2 times the charm for athletic wear?
So 2 things that you guys just said that I agree wholeheartedly with. First, one of the comments you made, Oliver, is this is a premium product. And over the next short run, meaning weeks, maybe a couple months, how much of the consumer is going to go out and spend on that premium product with all the unknown that's going on in the economy? And then what Michael said also is kind of reflective to Nike. Are they going to recover as quickly in China? They probably will. However, I see them pulling their guidance. I don't see them, really reiterating or stating any sort of guidance, which I think puts some short-term pressure on the stock. Long-term, I love this stock. 9 months from now, I see us back at new highs here. But as a trade for earnings, as a trade for the current environment here, with the massive amount of premiums that we are seeing in the marketplace right now, and I love trading these iron condor spreads, I'm doing the same thing here in Lulu, but with a very decided bearish bias to it, just on the print. So what I'm doing, Oliver, I'm selling next week's pretty much at the money call spread. It's a 195-200 call spread. I'm also selling next week's 165-160 put spread. So kind of an at the money call spread and about a $30 out of the money put spread. I can collect about $3.50 on that, which is a massive amount of premium, because the max that this could ever go to, Oliver, whether the stock went to 0 or whether the stock went to 1,000, this trade can never be worth more than $5. If someone's paying me $3.50 on that right now, and I have, a little bit of a bearish bias to that, I've got to take that.
Interesting. All right, so when you see that this is a stock that moves the way it does, Lulu's pretty volatile as far as retail goes. You've kind of got a short versus long-term view expressing that in different legs of this trade.
Yep, no doubt. And again, if I were making a long-term trade, I would absolutely be bullish on this. This is a trade specific for the earnings print. And listen, bottom line is next Friday, April 3rd, which is the expiration of this trade, my sweet spot in this stock at a minimum break even is 161.50 on the downside to 198.50 on the upside. Yes, I'm cutting it tight on the upside. We're almost there right now. But that's why I personally am a bit bearish for the report, for the print. But again, I'm 100% completely risk defined. If this thing does pull a Nike and does go up 10%, 15%, whatever it is, okay, I am maxed out at what I can lose here, and I'm willing to accept that risk.
Yeah. All right, fading the earnings move and looking at it for the long term. Another day we'll come back on the bullish side. I like this, Scott, looking at maybe, and hey, if the market pulls back, it's going to be hard for Lulu to break apart from that. I mean, I think that you also capture almost kind of a macro pull as well after 3 big days here. And keep in mind, we're coming into this event. If you're putting on this trade right now, stock's already up about $50 off the lows.
Yep.
So I think we got to keep that in mind. Does that go into your thesis here, Scott?
Oh, no doubt about it. And there's nothing magical about that it's up $50 or $80 or whatever it is off of those lows. Again, my premise for this is 2 things. 1, the massive amount of premium because of the volatility built in. And number 2, that I am a bit bearish here due to the earnings print, due to everything that you and Michael just talked about.
All right, Scott Bauer. Hey, before we let you go, what do you make of this huge move in the Russell 2000 right now? Domestic companies just powering through the worst economic data print. I don't think we can get enough takes, so give me yours, Scott.
My take is it's too much too fast. Just like it was to the downside, it's too much too fast to the upside here. I'd be very cautious of it.
All right, there we go. Fading Lulu. A Lulu trade, maybe also a market trade too. Scott Bauer, appreciate it. CEO of Prosper Trading Academy. Let's